Hey everybody, and welcome to Strategy Now here at MarketStream.Live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. See the markets ticking behind me, and as a matter of fact, taking a look at the midday markets, you have the VIX, the volatility index, actually up 20 cents, up 1.74%. You have the Dow Jones, taking a look at the diamonds, the ETF that tracks the Dow, trading at 206.82. Up 94 cents. That's about 0.4%, almost 0.5%. You have IWM, that's the Russell 2000, currently ticking up behind me at 35 cents. That's up about 0.2, almost 0.3%. You have the Qs, the QQQs, that's the proxy ETF for the NASDAQ, trading up 92 cents at 71, basically up 0.7%. And then the spiders. Trading at 236, that's the S&P 500 ETF, trading up 97 cents, that's around 0.4%. So you see the market clearly in the green across the board, including volatility. So I thought today what I would like to do is give you a little bit of a visual presentation, and I'm going to change it up a little bit. I'm going to actually walk through a strategic approach that I had mentioned this morning called stock replacement utilizing long-term options. These are options that basically have about 10 months or more until they expire. And so we call this stock replacement strategy with options. So with that being said, what I want to do is just jump in and give you a quick idea of how, with maybe a high-flying stock or stock that you've been holding for quite a long time, maybe a year or so, you're getting a little bit nervous about the market. Maybe you think that interest rates are going to be moving and that might adversely affect your position, or you're just not buying into all of the growth that we're seeing in the economy. Or maybe all three of these are positive, but you need capital and you need to move it off to the side. So what do? And let's take, for example, a stock. This is just a hypothetical stock, USB. It's trading at $35. You bought 1,000 shares at 35 bucks. And it's currently trading at $41.40. So you have a $6.40 capital appreciation. You like the prospects, but again, a little bit nervous about the market. You're a little bit nervous about interest rates and how it could impact this stock. And you're a little bit nervous about the fact that the economy may not grow as quickly as possible. So what do I do with the stock that's trading now $6 higher than what I had purchased it for? And I still have, though, I like the prospects of the upside, but I want to get some of that risk capital off the board. Specifically, I want to get the $41,040, $460 that I have in play. So what do? Well, the first thing you do is you have to sit back and say, well, do I want to take the taxable gain for 2017? Once you've assessed, yes, I do. Maybe you think tax reform's down the road, but you've had a long-term capital gain. So either way, you're comfortable with that. It's a $6+ profit. So you say, okay, I'm going to sell the 1,000 shares that I own. So I sell the 1,000 shares at $41.46. I collect that $41,460 back. So basically now I have that capital free and able to be utilized for other ideas. Specifically, though, I want to stay in a proxy position, as I call it, in USB. And so I'm going to buy a long-term option, something that's expiring about 10 months or more. And that's going to be the January $35 calls. They're expiring in January of 2018. And I'm going to pay $7.30. Now I'm buying 10 contracts because remember, I wanted to basically mirror my 1,000 shares. Now, does this completely mirror the 1,000 shares? No, but it does to about 80% of the total move. That would be the delta. Now, again, we're going to have some more. We have a ton of resources in our premium section where you can go in and learn more about the Greeks. But I'm replacing now this position that will track the market to the upside. As you can see from this graph, it'll track the market to the upside almost point for point. And my risk, as far as capital is concerned, goes from $41,400 to $7,300. So when you look at that, you're basically saying, all right, great, now I've freed up all this capital. Specifically, now I have basically about $34,000 worth of capital now available for other ideas. Maybe I want to do some debt reduction in front of maybe a potential rate increase. And I still have the unlimited upside profit potential of the upside, and I've limited my downside potential, unlike when I own the stock outright, to the purchase price of the calls. Okay, so this looks great. I mean, the potential risks, the potential rewards are fitting my risk tolerance and objectives. What really are the potential risks of buying these leap options, having a limited risk, the debit I pay of $730? Well, potential risks are, well, first of all, since you no longer own the stock and you own the calls outright, you're giving up your right to any dividends. So if you're a dividend player, you're no longer participating in the dividends. But remember, you are willing to give up that right because it freed up over $30,000 worth of capital. You don't have voting rights. So if there's any kind of vote that comes out during the trading year, because you don't own the shares outright, you don't have voting rights. Also, your break-even point, it's a little bit higher than where the stock is currently trading. How did I determine that? I take the premium I paid, right, $7.30, add it to the strike price, $35, and that gives you your break-even point. In this case, that would be $42.30. So over the next 10 plus months, if you do not believe that the stock could be over $42.30, then don't even do this particular strategy. As a matter of fact, you may not even look to get into the stock. But if you believe that the prospects are that it could get above that price level and well above it, this could be a great opportunity for you, because this is replacing as a proxy your upside profit potential without adding any more capital risk. So folks, that's looking at stock replacement. And as always, you can get in touch with me at jcusick@moneyblock.com, or you can email the folks at MarketStream.Live at info@MarketStream.Live if you have any questions. All right, and join us at 3:30 Eastern Time. We will be back online live where we will be discussing earnings plays that are going to be coming out this afternoon, and that will be at 3:30 Eastern Time in Tech Talk. So please join us. We'll see you then.